Ladies and gentlemen of the crypto space, we're live on a Friday, November 1st at 11:34 a.m. We're a couple of days away from this election, and that is going to be a turning point in sentiment. It'll come to a conclusion, all this run up into the election, and then you'll get the slide out of the election where everyone who thinks everything's going to change, nothing really changes, and everyone goes back to remembering or hopefully remembering that okay, nothing's really going to change. Doesn't really matter. Nothing really matters from a political standpoint because the powers that be are not who we actually see in office, and they are executing their plan. They're managing things the way they see fit behind the scenes. We never ever get to see them nor criticize them. And that is just an unfortunate reality that most people don't understand as we go on our day talking shit, social media about stuff that isn't even really the case. Anyway, that's the same thing exactly with regard to this Bitcoin chart, this lovely Bitcoin chart. Everyone's like, it's everyone's opinion. Everyone's opinion is just that. It's just an opinion. That's why I fall back on the way I think about things so consistently on data dependence. Because data is an opinion, and data is a fact. Maybe it's the only data pierce through all the insanity, all the bullshit, all the madness. The chart will tell you what it's going to do. Not in the future. It's going to, like, for instance, if Bitcoin is going to 73, 74, 75, 80, it's telling you something by that price action. If it's going down, it's telling us something about that price action. And that's how we get a sense of forward looking indicators on where Bitcoin's going to head, for instance, because we're looking at other action, not necessarily price, maybe volatility, like the move indicator, or yields on government debt, or the relative price of foreign currency. And that gives us great insight into so many things, including the Bitcoin price, but even maybe how well the election's going, like the relative price of currency. Isn't that fascinating? What you can see in chart data tells us are the powers that be squirming? Is maybe there a disruption on the horizon? And that doesn't mean a particular candidate. You can literally have a disruption from anyone who wins, because I don't think anyone who wins really matters. That's the great bullshit. Everyone thinks it does. So the contrarian must say, okay, if everyone thinks if someone in particular wins matters, then yeah, it doesn't mean shit because everyone is always wrong. Always take the majority thought and accept it as wrong because realize that the minority always win. It's just the way it is. Unfortunate. But once you identify it, at least you could start to align with those kinds of thoughts and those kinds of people who offer those contrarian viewpoints. And there's a lot of folks, and those are some of the best investors in the world. Quite contrarian. 70,088. So the monthly close was lovely. Check the monthly close. Not a record monthly close because we did in March have the all-time high monthly close, but that quickly was a massive bearish engulfing on the monthly. As a massive bearish engulfing. But this is a close above, this is the second highest monthly close in Bitcoin history. This is a close above the candle body wicks back in 2021. It's a massive level considering it's the second highest point in time. And maybe if we go into I don't want to go into dailies. So we've retraced off of, how do we see? It took less than a month from the candle body close. So we were talking April. April here. So here's the full retrace. One, two. Maybe I could draw it to show you guys what I'm thinking. Rush. One, two, three, four. There's your 1 month. So if you're on the monthly, that's literally there you go. So literally this is one candle right here is the monthly, and then you zoom out on the weekly, like there's your retrace, and that's your bearish engulfing from the previous 4 weeks. One, two, three, four. Let's start right about there. And notice how the close is lower than where this opened, but we just closed right there. What a level. 69 to 70, more or less. Zoom in. You can see it's 69,998. That is a hell of a level because that was also spot on previous resistance back in July from a wick, not a candle body close. So I think all in all, from what I see in data, we're so close. Everyone around the world is squirming. You saw what happened last night with India? Largest outflows um, since 2020. Oh, they look a bit rich. Okay, so it's everywhere around the world. And we come back to stuff like this. This at 135 is a massive number. And that is expressive of all sorts of uncertainty and fear. Um, this is to make a 135 on this chart for this candle to be 135. That's a massive amount of volatility. And what is volatility? They're not trading necessarily opportunistically, like folks trading shitcoins. These folks are moving money around, good part as collateral, um, maybe shoring up leverage. Probably in good part, that is exactly what they're doing, or taking on additional leverage. I don't know. There's no way to fully quantify that. Even the BIS struggles with that. But the point is, this is a monumental amount of money that is moving in order for this to be a 135. And what does this do? This is basically equivalent to your Aave health factor going all over the place, going from 1.2 to 2.5 to 1.8 to 3.2 to 2.0. And it's just, how can you make decisions? So when this chart is elevated, it's basically telling us that the world is not in a position to really make meaningful financial decisions with significant amount of capital. And they're probably being very defensive because they have an uncertainty of where the hell the volatility is going to take them. And that's just something very important to understand about where we are right now. Elections, debt market volatility. TXY is literally fluctuating between 3.9 and 4.1039 and 104.1, 104.2. Absolutely insane volatility in the currency market. I wish there was a volatility indicator for the currency market also, just like we have for the debt market. And we clearly have that for equities with the VIX. That'd be a nice indicator. Um, Ethereum still sucks. Bitcoin down. I mean, Bitcoin's dominance is just not even down. It's frankly the fact that it's above 60 is quite um, impressive to say the least. It's not unexpected, and there's no certainty where it goes from here, considering everything we understand about the Bitcoin market. Anyway, so that is so global, such a collateral instrument, and that is kind of the title of the stream. Let's go back here and take a look at the title. Cash or credit? So I like this headline from Florida where states are investing. What investing just means owning shit. And, for instance, you own a bunch of real estate. Uh, okay, you don't want to sell it, but you got 5 mil worth of real estate. You want to borrow a mil. Okay, that's where collateral comes in. That's the same thing with these investments that we know all too well. That is the protocols that we know all too well, like Aave, amongst others. That's more of a money market. When you have credit market, lines of credit. like Codex, CDX where we talked last week about that new product launch from Beavis and team. And I'm fond of basically predominantly three protocols right about now. This really comes down to interest rates. It's all about interest rates. And that's exactly what we look at when we look at macroeconomic things. Interest rate volatility. That's exactly why um, when interest rates are highly volatile, it suppresses economic activity. So when they're stable, it increases economic activity. And when they're high, that also suppresses economic activities. But that's the whole point. Elevated interest rates strengthen currency. Lowering interest rates weakens currency. So that means there's really only three protocols in all of crypto that I'm really fond of with regard to credit, lines of credit, or just the concepts of credit. I'm not fond of Dow adjusted interest rates. No, no. That'd be too slow, and that's permissioned. It's not like an individual, but it's a group of individuals, and that there's argument there for it's decentralized or whatever. It's DAO controlled, so it's consensus driven. But that's not the way the future is going to be. The future is automated, based on feedback, automated feedback. We use services on in mobile, and service is a very historic Java concept, and Android as well. And there's plenty of processes and things you do service side as well, cron jobs and whatnot that are periodically running, measuring, responding, and and tweaking and modifying parameters. That's the whole point. That's the entire point. Depending on the price of money, you may need to increase interest rates to strengthen it. You may need to lower interest rates to weaken the currency. So that is exactly where I see the future of currency, or at least currency from a credit perspective in these crypto markets, uh, and the create currency. And that's what's so bullish about crypto, is it not? Making currency. It's called cryptocurrency for a reason, right? So I think folks never really understood what that phrase meant. Cryptocurrency. They thought like an ICO or creating a token was some sort of currency. Fuck no. Currency is a manifestation. Uh, Currency is it's completely dependent on relative valuation and cost. What's the cost of a currency? I mean, that's the whole point, is it not? If you could instantly create a currency with a token mint, be it a meme coin or whatever you want to call it, old school ICOs, it's worthless. But if it cost you 3%, 5% to create a currency, there's a cost to the currency. Okay? Now that's something that is very meaningful in my opinion. So you go over here, there's a cost to this currency. You can literally visibly see it. So then you'll have interest rate arbitrage because almost 20% for the cost of this currency. I literally get different terms. Obviously, there's a reason why you arbitrage and you may favor this high interest rate, because surely $60 million is favoring this relatively elevated interest rate. It's because of the soft liquidation mechanism, and there's almost no credit extension on DeFi.money. Relatively, it's only a couple $1 million, 1.8 million, I think, $1.75 million. That's basically zero. It's all basically zero, and that's the whole point. You go over to analytics and you hit stables and you hit Arbitrum, for instance. DAI doesn't count. I mean, Frax, and clearly Frax doesn't count on Arbitrum, 24 mil, basically zero relative to the total amount, 4.45. Then you go over to base, Dollar's cool. It's nice to see dollars traction on base, but there's nothing here. There's no currency creation going on base. It's dead in that regard. Nice, nice total available capital, 3.789 billion, but none of there's no cost to that currency. So therefore, it doesn't create velocity. Therefore, that currency gets stagnant. If you have USDC and it costs you nothing to have it, it just sits there. But if you have CRVUSD and it's costing you 10%, oh, that means you got to earn greater than 10% on that money. You see, that's why the cost of currency creates financial activity. Let's go over to mainnet. DAI doesn't count. Athena, I don't know. Who's pay? No, 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 no. There's no cost to any of this currency. PayPal USD, USDS clearly, it's DAI's replacement. The cost of currency really comes in with Frax and Go. That's interesting, actually. That goes up there at 181 mil. Why is CRV USD not here? Oh, there it is. 50 mil. Oh, 10 mil off mainnet. That's pretty cool. Liquidity 66 mil still hanging in there. There's a cost of currency there, a fixed rate cost of currency. I'm not fond of fixed rate cost of currency. It works well for banks because banks, it's not even pegged to the dollar. It's like it's written in the banking contracts for them to be a dollar. One HSBC dollar equals one Chase dollar equals one Wells Fargo dollar. That's such a load of shit. I find that fascinating. Always did. So, um, cost of currency really means a lot, and they're fooling everyone when they do things like that. Anywho, um, hey, look, this is a Web3 dollar that's based on Reserve. Good to see them with 46 mil. Reserve's old school. Reserve is around, and they started in 2020, 21. Reserve Protocol. How the hell does Bean still have 3351? Mim hanging in with 27 mil. Nice cost. Mim has been around and they survived. Actually, they're starting to pay again very nicely. They've all paid very consistently with vote rentals. Alchemix, good to see, 32 mil. See, here's the kicker. No cost of currency. All this shit just sits. It's liquidity. It doesn't create financial activity. And there's no leverage, there's no credit. It's not credit. So these stable coins here don't count in the topic that I'm trying to express. Even PayPal. Go and Frax are really the start of dollars that create financial activity, encourage behavior. People need to actually outperform, and they need to invest in order to account for the cost of the currency. Anywho, these are big concepts, but I think these are the biggest concepts heading into the future. I just don't see it any other way. I mean, meme coins are great, but there's nothing systemically meaningful about them. The rotation of capital will continue over and over again, and that's fine. What I am interested in is when they do stabilize some of them, the big ones, and you could collateralize them and access the equity in them. Stabilize, because the big ones become meaningful in society, like Doge. If you got 100 mil worth of Doge, all right, well, borrow like 1, 2, 3 mil, and you could basically do the same thing as you do with Bitcoin. In the coming 4, 8, 12 years, as it appreciates after its massive drawdowns, you can perform the same financial and capital management where if you're appreciating at a CAGR of 30% and you borrow 10% a year, you're good. Okay, does that make sense? Um, which means, for folks that say just accumulate Bitcoin, you need a shitload of Bitcoin to be able to engage like that. What, 30%? If you want a salary of like 100 grand, you need a mil in Bitcoin, and you can borrow 10%. And Bitcoin's compound average growth rate is 30%. Does that make sense? Hope that makes sense. Um, Anywho, lots of thoughts. I'm very hopeful in the next week or two or three, maybe November, we start to see a little bit more support in the market. Let's go back to some charts, and I'll go through some comments. Here's the weird thing about Ethereum. The weird thing about Ethereum is that it looks good dollar denominated. I think that means something because people have such a bias towards, oh, if it's not outperforming in Bitcoin denominated, you really need to just own Bitcoin. And I don't like that. You know why I don't like that? Because everyone thinks that's the case, meaning you got to own the fastest horse. Um, and that, to me, not something that should be the case. You can own whatever you want to own, and it doesn't mean you all have to own the same shit. It's okay to be different. Isn't that something we kind of want to teach our kids? It's okay to be different. It's actually important to be different. Otherwise, everything's boring as shit. Got to vary things up. Anything else interesting this week? Um, Rentals went up. Rentals went up. That was nice to see. As I mentioned, Abracadabra bumped it up a little bit. And we got some nice flows. Look at that. That's interesting. Huh. CBBTC? Who the hell is paying 13 grand to finance CBBTC liquidity? That's interesting. And USDC, no less. Huh. That just came in right now. They're gonna get my vote. Jesus. Ay, ay, ay. Look at this. Numbers are going up. Dollar strong. There's your abracadabra. Here's some big numbers. We haven't seen some big numbers like this in quite some time. Threshold has been predominantly renting on Warden. It's been relatively quiet here, but they basically own it, as you can see. It's just all Threshold. Yeah, that's TBTC. TBTC's come a long way. I remember when they first came out, and Ren BTC was the shit, and TBTC V1 didn't do so well, but V2, I think they got a nice product. Great way to get capital in and out from Bitcoin to any EVM for that matter. And what was it? WBTC Garden Finance. Yeah, Garden Finance. The old catalog finance. Very important to have these types of links because yeah, I might as well leave this one up in a bridge. This is Garden Finance. I'll put this one right next to ThorSwap. Because ThorSwap will also get you Bitcoin to native Bitcoin. See? And then here you get WBTC, but you could also do Threshold, and that's your whole Bitcoin stack. That's your whole Bitcoin stack. Be- Mint. Jesus. Okay, so let's put that here. Bridge on Mint. 3.5 hours. 3 to 5 hours. Not bad. TBTC. I got this nice list of bridges across who partnered with Uniswap. Here's your Bitcoin bridges. SolarSwap also gets you to Cosmos hubs. Crosscurve. I love this product. Not just because of its curve integration, because AWA's just built a great product, this Crosscurve. Really cool. Don't need that. And obviously Stargate's big stuff. Christoph, good morning. Cap, do you have any Phantom Sonic protocols currently on your radar? Yeah, what's the name of, I mean, obviously Solidly's there, so Solidly's been there. What's the name of the one that's just launching? Looks like it's going to drop us a little something for being part of the kingdom. Oh, come on, it was right here. Ba- 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 Really? I follow that much shit? This is the Solana one, which we're probably going to get nothing for. Maybe we will. I don't know. Here, Shadow Finance. There you go. Launching on Sonic day one. I think we got to drop like at some point, but something to keep an eye on. Token sale in 24 hours, and that was 21 hours ago. And here's your PGE. Did they call it an LGE? So obviously that's their raise. We'll see. I mean, got to remember, don't have much expectation for quite some time. We all have a high opinion of what Sonic is capable of, especially me. But from a dollar standpoint, you go over to Phantom, there's 317 mil. It's microscopic. In fact, Near Near has more money, twice the amount of money than Phantom. And even like how much does Osmosis have? I have 553 mil. It's not as small as Cosmos Hubs, but Phantom 317 mil comes in the smaller side of the markets. Not much financial activity there. If you go over to volume, go over to Phantom, talking 16 mil in volume. That's goodness, that's painful to see. Look at curve up 115%. You know why? You know why this curve is doing well on Phantom? That's because of this little baby. This cross-chain protocol. It's a bridge, just like Stargate or Across. Okay, it's a bridge. Runs through Phantom. That's cool, right? So there's your volume. That's good to see. Where the frick is Solidly? Come on, guys. Oh, Solidly Labs. That's so weak. That's so weak. Wish it could do more. Wish it could. I wish the best for them. Shadow Dex's Kingdom. Oh, Shadow Exchange Arrow? No, that's it. I'm looking at what you're talking about. Is it Kingdom? Is it Kingdom or is it a partner or is it just someone who's being considerate to the kingdom? I guess those are the types of questions I have. A was in the house powering Crosscurve. How do you like that? How do you like that? Let's just pull it up one more time. Y- This is A was doing right here, everyone. It's important to understand global financials. It's important to understand the mechanics of currency and the price of money. It's important to understand how crypto markets work and how money flows and how assets are priced because like on first glance you're like, why is curve up 115% in volume on Phantom? Oh, and then it's just obvious because this is a ridiculous product. Have you seen the the analytics? Lovely analytics. Good numbers. If it loads, that's another story. There you go. It's just an explosion. I mean, obviously with the points farming and whatnot, but that's 10 mil. That's a lot of mil. Basically parabolic. Look at that cumulative transaction count. That's lovely. Has a massive from 7 and change to 20. Is that what Linnea, um, the Linnea offer? I don't know, but these numbers are huge for small. We're not talking Stargate numbers, but these are very impressive to say the least. And like Stargate had to build out their entire LP infrastructure to facilitate, cross-chain liquidity. Whereas this has the liquidity. The liquidity is already there, and it's very efficient LP deposits. This tech stack makes perfect sense as ancillary to Curve as a piece of infrastructure. Wow, 11.7 mil. Remarkable. I see. Do I see? I don't know. TVL 11.19, but say 11, yeah, 11.7. Remarkable. Yep, and we just announced TGE. Is there the TGE? What, on X? Oh shit. Listen, there's a whole lot of stuff going on, boys and girls. This is why probably should have stacked a little bit more cash over the last 2 years. So you got AWA coming up, you got Shadow Decks, which I believe is today. Um, what else? You got DeFi money. I don't know. I don't know their. Ex, I don't have an expectation for their raise. Uh, but I don't know. I think it is a good idea to stack as many points as possible. Just I've been using this product, and it is just remarkably simple. Like this cross chain right here. You see that this there's only one other product right now. Tapioca is going to do it when they finally figure out what the hell they're up to. But Abracadabra's MIM is omni-chain, but I never really used MIM. It didn't really hit my fancy, other than um, from a vote rental standpoint on like a vote market. But because this is just an example of what's possible. It's less than 2 minutes. This isn't Stargate. It's not looking for liquidity. This is layer zero. So it's literally a mint and a burn, a burn and a mint. So this process is really crazy. It's just like boom, 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 boom. You can really see once you have liquidity across the chains, um, you could use an omni-chain fungible token uh, for doing interesting things. Obviously arbitrage, but possibly even transactions that are outside of like available liquidity. For instance, if there's liquidity in money, you could move it and then swap to something on a destination chain. So it could replace the absence of cross-chain liquidity in something for something you have to get something you want. Anyway, I hope that makes sense. I'm quite fond of this, and that's something I mentioned on social media yesterday. I'm fond of this protocol. I'm fond of AWA, and right about now, I'm not fond of spending excess capital. I'm fond of showing alignment with the things we already own, and there's no greater way to do that than literally just depositing liquidity for AWA points and for DeFi money points. So why spend money if you don't have to? Frugal. Be frugal. Arrow, he said, keep them adjacent. Adjacent. I like it. I like it. All right. Hopefully they give us a nice drop. See? Exposure without spending money. very much looking forward to Sonic and seeing what kind of activity it can experience or what because we all know what happened in 2021 with Phantom. It was wild. That wasn't no ghost town. Hey, well, yep, and we just announced TGE date, 11.7 mil. Imagine what we would do after the launch of our DAO. Yeah, I'm quite excited. Sex listing with 14 days. Yeah, it's big. Sex listings are always big. It doesn't get me excited though. I'm more interested in on chain. Like, you know what we haven't seen someone do other than Aerodrome is tap into Coinbase. It's not base chain. It's Coinbase chain. We've seen that very clearly in um, Moonwell's deposits, like 60 mil, and there's like a couple of bill, 3.6, 3.7 billion USDC on base. There's no financial activity on base. There's no credit. There's no real lending. Moonwell's got the 60 mil, but how much credit is out there based on that? That's basically what's 60 mil on 3.7 billion. So the point is, it's not it's not arbitrary. It's not like a chain like a that you would typically associate with people engaging in crypto financial activity. It's literally all the volume is from Coinbase and arbitrage. And that's cool and all. So I'm curious what protocols tap into that. And clearly Superchain 1.0 narrative is a big deal. Um, so that's just something on my mind. Got to see credit. Without credit, you don't have a financial market. It's just a transitory destination. That sticky. I mean, there's sticky capital for other types of arbitrage reasons, like geopolitical and regulatory arbitrage. But without credit, it's not a real financial market where there's a cost of capital, and that creates velocity, and that forces financial activity. Yeah, I'm looking forward to what you guys are cooking, Awa, because of the potential volume for Curve, because of the integration with Phantom slash Sonic, and because a hell of a cross-chain bridge. Um, it's just a lovely product. It really is. DeFi Money also, Chads, you're right. See you around. Have a nice stream, Cap. Thank you guys. Bye. Much a pleasure. I appreciate you. Brian Morrison, happy Friday, Cap. Happy Friday. Let's go back real quick. Anyone here farming? Or is it just folks buying? Because to buy. So that's why I say, why would someone right now for someone to not farm? We've been talking on Discord, like, oh, I'm tired of points. But points usually mean something when it's a meaningful protocol. Like these points are probably going to be quite interesting. And it literally explicitly says RAWA converts 1 to 1 on TGE. So it's literally telling you that the farm points are going to be worth capital. So I could see how I'm tired of like what blast, hyper, whatever. Oh, that was yeah, stupid points. Like pick a protocol that you're thinking of and it has stupid points. I think these are two very interesting points. We're talking about two protocols that are tightly coupled to Curve as a base layer piece of infrastructure. Very, very interesting to say the least. Anon, what is reason CVX long downward trend? Because Skibbity Toilet is fun and popular, and financial astuteness is not commonplace, and malinvestment is very prevalent. It is more popular to take a 0.0000001% chance at making money, which usually is just prior to losing all of it, than to invest in something that has a narrative that the majority do not understand. Nobody understands finance, which is why I talk about finance, which means I'm also early and hard to distinguish between early and wrong, but I know I'm right into given enough time. Credit is finance. What is credit? Cost of capital. These are some complicated topics, and it is much easier to focus on brain rot and things like Skibbity and other insane, worthless meme coins. But they're not worthless. They're meaningful because the culture has degraded to such a degree um, that these memes are not worthless. It's a little bit of a contradiction to what I just said. They're not worthless. They are worth, but you have to be aligned with the culture, and it's still going to pump and dump. Don't get me wrong. Look at Mudang. That thing was just massive, and they're all massive. Look at Kakek. It's going to go wild, and it's all just a concentration of capital from the late to the early, from the majority to the few. And guess where all of them are going to invest? You think a person's gonna rake in 5, 10 mil off a meme coin and they're gonna buy another meme coin? I mean, some degenerates do, but they just buy shit like Aave, and they buy shit like Curve and Convex, and they buy technology, actual businesses like the stuff that we talk about here. So that's why CVX is on its long downward trend. It doesn't mean it's not meaningful at all. It means it's not understood. Therefore, it's not appreciated. Therefore, it is depreciated. The market is not appreciating it. I'm actually more fond, and I have been since a long time, base layer, VECRV versus CVX. Um, Tetranote always said the amount of boat rental was uncapped, and I was never fond of that perspective because they would always say like, it's the rat race because V curve is always getting diluted. But that's the same with like you have a certain amount of Bitcoin, every day there's more and more Bitcoin in circulation. You're always getting diluted every day as a Bitcoin holder. From there, you'll be getting diluted in Bitcoin for the next 116 years, give or take. Every day there's more and more Bitcoin. Is that something people don't know? So I think and that's generally my sentiment for Curve as well. Okay, so the max dilution is what, 100%? So 50%? Okay, so what's the upside on potential volume and transaction fees? Okay, I'll take 50% dilution with that potential upside in transaction volume and fees. So I do favor VCRV over VLCVX. That's not really an answer to that question. Um, but that's why everything, anything that is of financial significance, is in a downward trend because people require liquidity and capital in order to take advantage of other opportunities that are outperforming. Capital is flowing from underperformance to out. So this is why I bring up very long time frame stories, and I try and share folks that perspective that I have. All that matters is a higher low and a bit of a different perception of time and allowing time to pass higher low another 4 years, higher low, another 4 years, which is very consistent across all asset classes. Very Bitcoin centric kind of talking point. 30% CAGR. All right. That's all that matters. Compound average growth rate. So I just want a compound average growth rate with rate of return because I expect the cost of capital to go up in meat space, but I also expect the cost of capital to be worth paying in the crypto space. And that cost of capital would generate cash flow. So the reason I actually explicitly don't like CVX is because you have no access to the VECRV cash flow. Like CVX CRV, you could choose to be all cash flow. The VCVX, you get no cash flow. That's all governance and vote rental cash flow. And I actually literally just want the cash flow. Um, very, I mean, the cash flow is pretty good. It's relatively small percentage. It's greater than the risk-free rate of return. Pretty sure. Let's go to Classic UI. Go to use curve. Um, yeah, I mean, no joke. Curve is paying greater than the risk-free rate of return. So if it's paying 6 to 8, it's literally paying. Let's look this up. I go. Let's look it up on a big chart. Ticker. Oh, wow. That's on the monthly. Let's go to the weekly. Well, that's also with dividends. Is that with dividends? Yeah, that's adjusted. Yeah, look at that without dividends. So okay, so Realty Income Corporation is down significantly. Look at those dips. Jesus, it was up at 82. It's at 59. It's down meaningfully. Not as much as a curve retrace, but Realty Income Corporation is paying. uh, what? Yahoo. 3.16, 5.33%. And that's actually Jesus. Are they really paying 5.33%? Damn. But Curve is paying 6.82%. It's really, it's just the dividend investors. They just don't understand that. Like, where does the money come from? It literally is a business. It's just a business. It's just a digital business. Product services. Come on. Literally outpaying Realty Income Corporation. Anyhow, hope that helps. Anonymity. It's disappointing, of course. Watch plenty of capital evaporate or unrealized losses, unrealized gains, or whatever the hell you want to call it. Good cash flow over the last years. I tell you, October was my weakest month in revenue in the last 3 years, 22, 23, and now 24. I think we're getting close, ladies and gentlemen. Christian John, Trump will make points creating. I think the concept of points is just an expression or a way to say hi, I align with the protocol without compensation, because you really need to align with the protocol to put in capital to get nothing in return. So I think that is interesting, and maybe he will. Basket at the thing that makes DeFi money attractive despite points farming is basically free leverage, low interest rate right now, and high quality audits. Yeah, I'm. It's also not just the audits. It's already CRV USD. It's been extensively audited by Curve and their audits. So all the modifications on top are tweaks. I'm sure they're not modifying a lot of Mitch's code. Obviously adding on points, modifying collateral types, but generally speaking, it's predominantly CRV-USD, and that's comforting. So there's plenty of things about DeFi money that are very interesting. Like when's the points? What's the plan with the TGE, cap raise, governance? They have mentioned governance left and right in their verbal talks. Governance all over the place in what they talk about. So how does that play into curve? I mean, what's the point of VE curve points? Meaning we're getting a huge amount of points if we are large VE curve owners. So how does the alignment play out from a governance standpoint? Very interesting. How does that all play out? So this UI is just wild. I mean, I keep it in crazy color mode, but this is such a simple user interface. Lovely, simple user interface. Just market. I'm on Arbitrum. I'm on Optimism. I got Bitcoin and just add collateral. One Bitcoin, borrow 10 grand, call it a day. Very, very simple user interface. I heard you could manage the bands. That's what they said on the stream. Can we manage the bands? Anyhow, I thought maybe, maybe, can we? It's just zooming in. All right. Anyway, George. Hey, George. It's been a bit. Hope you're good. Any plans for deploying the stables you have? Yes. I I'm probably going with either fluid or beefy. That's where I'm at. Wherever it's going to be denominated, auto compounded, meaning it's not going to necessarily be, it's not going to be deployed to like a non-dollar unit, Ethereum, Bitcoin, whatever, anything. No, but it could be FXBs. Maybe it's beefy on Fraxel. Beefy. Yep, beefy. Well, whatever Beefy offers as an LPing or not Biffy. I'm not buying Biffy. Not buying. I'm not buying anything. I want I want cash and cash flow. So if we go here, can I search for it? Where's Fraxel? There you go. All right, Fraxel stable coins. Is it all right? Oh, let's turn off. Okay, what's on Fraxel? Nothing on Fraxel. Clear. Okay, no Fraxel. Yeah, here. Okay, that's pretty cool. That's the FXX, FXS on Fraxel. Huh. I mean, these are big numbers here. Yeah, like look at this, 22% Frax FXBs. That's a great destination for stablecoin. 22%. See, 22% is such an extraordinary amount of money or extraordinary number. I mean, clearly from a Bitcoin perspective, 30%, that's a hell of a CAGR. Um, it's a solid investment, 30%. And obviously you have your non-confiscatability, so that is meaningful. But 22% on dollars, where you don't, that's also damn fascinating. And here, CRV-USD, just in Llama Land market, 21%. That's big stuff. Let's sort because it looks like, wow. Okay, I see what's going on here. Try FXP. That's cool. Huh. Ah, that's cool. FXBs, they're going to be volatile in price, but obviously they're bonds. So on face value, they pay. So what is this? 2025, 1231. That's interesting. I mean, this is interesting. This is an interesting product right here from a beefy perspective. Um, that's cool. Let's go back to stable coins though. All right, maybe that is interesting. Cracks paired with an FXB. And what FXB? It's 2029. So there's probably a nice discount and it'll increase in price over time as it gets closer and closer to maturity. That is a hell of an interest rate. Nope, there we go. And boom. And auto compound. And so that is probably what I'm thinking, George. Something like this. Fractal's hot, and I'm very curious what's going on with Fluid. Because Fluid has their new integration with their deck. So it's going to be leverage for the first time ever. Debt isn't an under dead weight on your portfolio. So it's like you have debt, but it also throws the collateral and an LP. So I know that sounds pretty Lego-y, a little bit of rehypothecation there, but it sounds good. So I'm curious what numbers, um, what numbers come out of the system. Hope it helps. Cap, you mentioned asked DRVUSD a few days ago. I couldn't find much about it. Can you please expand on what you know? Well, it's right there. Here's the library. Basket, not bad. I actually had it in my history. So it was called STCRVUSD at first, but as DeFi Money came on with money, SCRVUSD, I think that's probably why they went with that. But there you go. 2 week, 4 days ago. So they're iterating. Let's go in for the fun of it. What was 4 days ago? Deposit limits, TWA calculator, just an algorithm. Compute time weighted average. Huh. Interesting software. Okay. So so that I think is going to stabilize CRVUSD. Should be very interesting as SBRV comes online, paying an interest rate. George, beginning of the stream, cross curve. In fact, if you scroll up, cross curve was actually on. AWO was on. So they had some good things to tell us about where they are in their capital raise process. Interested to hear you talk about it. We'll check out the start of the stream. If so, yes, indeed, we talked about cross curve earlier in the stream, my friend. Basket, you're very welcome. I'm gonna wrap it up. We're in at about an hour right now. I do have some folks at the office trying to ping me, but that's good content for today. We're talking about two protocols a lot lately, Cross Curve and DeFi Money, and that's okay. I'm not one to just flip flop. I'd be a good politician, I guess. I either find something that is meaningful and it stands out, or I'm not interested in anything. And I have very low risk tolerance. That's just not a bad thing. You go on streams and folks are, oh shit, look at this ticker. Look at this Kakak is crazy. He's gonna go to the moon. You're gonna turn $100 into $102 in 5 seconds. There's so much anxiety out there, folks. So many folks are running around like chickens without heads, not knowing what to do. I did a poll a while back. Where was it? Man, I read a lot of shit. I write a lot of stuff. I did a poll a while back. I don't think it was that far back. Anywho, it was like, who's cool, calm, and collected versus who's frantic trying to figure out what to do. I mean, the whole point of this is especially the content that I try and teach you guys, is you can't be frantic. not only shouldn't you, that is something to cure. It's imperative in order to outperform, in order to do well, in order to be healthy. There's no room for anxiety, period. Cool, calm, and collected. That's it. Otherwise, you're going to fuck it up, and that is not what we want to do. I like these new images. And you know what it is? I went with a little robot for a little bit. I was doing the sailor without his shirt on for a little bit. I like this guy. I go through cycles with my Midjourney imagery. I think this one's going to stick for a little bit. That's a crazy headline. Anywho, George, you're very welcome. It's Friday. Let's wrap it up today. Monday, Tuesday. We're coming up on. There's no not. We don't have a whole week before the election. It's literally Monday, Tuesday. So Monday we'll talk, and maybe we'll have something interesting leading into election day. But try and relax over the weekend. Don't burden yourself. You put in the work, hopefully, over the last couple of years, and it's down to the last days and minutes, really, for this market to tell you what it's going to do. We are at the mercy of a market, and all you got to do is put the right quarters on the right railroad tracks because the train's coming through. Shit, this is true. Train is really coming through. So stop throwing quarters at the damn railroad tracks, okay? Friday, November 1st at 12:36 p.m. Thank you, everyone, for joining me today. 116 people made it to the end of the stream. I appreciate each and every one of you, and together we are a little bit more rational now that we're at the end of the stream. See you after the weekend. Catch you on Monday. Peace.